Hey, everybody, this is Adam Strum, and we're about to go cruising into a better financial future with your host, Kim Cruz. Hey, everybody, it's time to go cruising into a better financial future with your host, Kim Cruz.
Thanks, Adam. I am Kim Cruz. I'm a wife, a mom, daughter, sister, friend, entrepreneur, and business owner of Cruz Credit Consulting, but not necessarily in that order. I have over 30 years experience in corporate America and a passion for helping people succeed in all areas of life. And I am joined by my friend Adam Strum. He's actually the brains behind this production. Adam?
I'm Adam Strum, former owner of Financial Rescuers. I own On Target Strategies business consulting firm, helping businesses stay financially solvent and stay on track. And I'm half owner of US Financial Alliance, the USFA you see behind me, helping people with all things financial, with one exception, which brings me to our guest, but I'll talk about that after you, Kim.
And together we review our listeners' financial problems and address them with our experience, tips, tricks, and resources of network referrals to help you cruise into a better financial future.
Excellent. So, like I said, the one thing USFA doesn't deal with is the IRS because that is a monster with 3,000 heads that we choose not to work with. However, our guest today is someone who's been working for consumers and businesses with the IRS for almost 40 years now. And he has a ton of experience helping people get out of their collection issues with the IRS. And he's going to talk with us today about all different types of tax issues and problems people face. And I just can't wait to get the information because he's a walking encyclopedia when it comes to the IRS. Pleased to welcome our guest, John Jones.
Yes, thank you for being here, Mr. Jones. Awesome to have you here.
Sure, I'm glad to be here.
We're glad to have you. Give people a little bit about your background. We'll let you have the stage for a few minutes here. Tell people what it is you do every day, because I don't know if I could do it without heavy drinking.
Well, heavy drinking doesn't help. I'll say that first of all. What I do is I help people with some pretty ordinary problems, filing tax returns. I do tax planning. I help people do financial planning as well. But something I've gotten involved in the last few years, actually it's more than a few years now, is helping people solve their IRS problems. And generally those people fall into people who are self-employed, people who run their own businesses, people who don't have somebody withholding their taxes for them on their paycheck, so that they've got to pay them on their own. And the confusion they run into when they try and comply with the law, and some of the problems they run into when they don't comply with it. So I find the work to be very rewarding. I think it's fun because when
I can imagine.
you solve some of these problems, it's a great relief, and they're very grateful. And when somebody's grateful, that makes me happy. So that's why I do it.
That is awesome. And,
God
Adam and I
bless.
deal with credit all the time, and people put their credit issues in the back of their head because it causes fear and anxiety and they don't want to think about it. But I think even more so when somebody has a tax issue, they put that way in the back of their mind and they don't want to deal with it. And most people don't deal with it until they get a letter from their employer saying, the IRS is looking for you and they're asking us to keep some of your wages. So you are a phenomenal resource for us to have on our show today. So excited to have you here.
I couldn't agree more. Before I hand it over to you again, John. Yeah, people have been convinced over the past 50 years that the IRS is a monster and that you do not want to talk to them or deal with them yourself. And for a lot of it, they're actually right. It's one of the most bureaucratic places on earth. And that's why it helps to have someone who really knows how to navigate all the proper channels there, helping them, which is, I'm sure, why people are so grateful for the help you give.
Yeah, and that's why I like it. I mean, it's fun. It's also challenging too. I like being challenged. I like facing problems and dissecting problems, analyzing things. So
I'm a debt negotiator. I love doing that.
yeah, you know, And one of the things, I'm on the public side of accounting. I'm not on the controller, treasurer type side. So I get to deal with a lot of different types of people in all
Mhm.
types of different occupations, different income classes, different backgrounds. And I really enjoy that too.
Awesome.
Okay, so you run the gamut. I know that we've referred Kim and I have referred a couple of people to you, and they've had nothing but great things to say about their interaction with you. And in fact, you've helped both of them already. You haven't completed the work, but you've helped both of them already, and they're stress-free at this point about the situation, knowing that it's under control. So I highly recommend if someone's having a tax issue, that you're the man to call.
Well, taxes create a lot of stress. Create a lot of stress in your personal life, create a lot of stress in your relationships between spouses, between taxpayers and their children. It's there's a lot of psychology to it, a lot. And you have to face people, you have to persuade people to face these problems. You have to persuade them that the problems are, you are capable of solving the problem, that there is a way out. And like one of the, as far as relationships are concerned, like one of the biggest sources of referrals to me are spouses, people referring their wife or their husband. There's problems in the marriage. Like a lot of the problems I deal with are marriage type issues, people on the verge of divorce or who have divorced. And we know that when you look at divorces, one of the biggest reasons people get divorced is finance. And,
Yep.
and within that, taxes play a big part of that. And, that's why I like, if I can solve that problem, I can really help people out in a lot of different areas of their life.
Sure, and you have different types of taxes too. There's personal income taxes, back taxes. One of the biggest things businesses run into is not paying their proper amount of sales taxes on time. I know that destroys some companies when they don't
Sure.
properly save and quarterly issue their sales tax reports. The IRS comes after them pretty hard.
Well,
Yep.
one of the toughest areas is payroll taxes. And
Oh,
what makes payroll taxes especially tough is, even if it's a corporation, the tax is attached to the owner personally. So,
so there's no veil.
right. And you can't have them discharged in bankruptcy.
Ugh.
And there's something called the trust fund penalty, which is a 100% penalty. And,
Wow.
it's very, very tough to get around. And, I do whatever I can to urge people to keep compliant, to keep up with it. And if you
Sure.
can't pay your payroll taxes, you got to really examine your business model.
Yeah, you're gonna have to cut your profits a little and make sure those payroll taxes are paid on time,
Right.
because that's what
Definitely.
funds Social Security and other program. Well, not directly, indirectly, but that's the government depends on that money for programs that it administers. So they go after that first.
And this is definitely an area that business owners need help with. This isn't something that they can tackle themselves. When we talk a lot about what you need to outsource,
So,
this is one of them.
so the IRS looks at payroll taxes when payroll taxes are withheld from a paycheck. And if that business owner does not turn over that money to IRS looks upon that as stealing, because that's not the business owner's money, that's the employee's money. And they go after, they attack business owners as though they're criminals. And those would be really tough negotiations. That's why, I tell people, the first bills you have to pay are your cost of goods sold type of things, because otherwise you're not in business. So if you're a restaurant, you got to buy the food. But after you get past that category of expenses, you got to put payroll taxes right at the top of the list, because you're never going to get out of them. And the consequences are personally devastating.
Sure.
It affects your personal life, even though it's a corporate debt. The corporation doesn't protect you.
And people may not know this, but it's not payroll taxes related, but people may not know this, but the IRS has much greater power and authority on garnishments and levies than the regular creditors do in courts. For example, I had a client a couple of years back whose paycheck was being garnished 85% by the IRS for back tax debt.
Sure.
Now, normal states limit most garnishments to 25%. Most states are 10%. But the IRS doesn't have to abide by those. They are federal. They are above the regular system. And so they get to garnish at a much higher rate.
Right. If a taxpayer owns real estate with a mortgage, the IRS assumes the senior position, even if it's a new debt.
Oh,
They're the first ones to be paid off, which is
Yep.
why banks and mortgage companies are skittish to lend to people unless they've
Mhm.
got good, good tax records. They
Well-
move up to the top of the list.
yeah, they own a lot of property these days. That being said, Kim, you have an article of the week that's right up John's alley, I believe.
I do, yes. This article actually came from CNBC, and it is in their personal finance section. It's going to become harder to avoid telling the IRS about income from selling stuff online. And here's what you need to know. And it talks about the key points that effective next year, sellers on certain online platforms like Etsy and eBay, they're going to start receiving a 1099-K if their sales are at least $600. And that is up from $20,000 and a minimum of 200 transactions. So I know a lot of our audience are entrepreneurs and they sell things online. This is going to have a huge impact on them because this is a whole different way of doing business. Not only that, it's a whole administrative change for the platforms that now have to issue these 1099s.
Right. And it's not just selling things online too. If somebody drives for Uber, they're going to be subject to this. If you have any service that is paid for by a third party that comes through one of these paid platforms, you're subject to it. So people are always thinking, well, if I sell this or that on Etsy, I'll get it. But it's a lot more. It covers a lot more people. And I wonder how IRS is going to keep track of all that data, but I'm sure they'll find a way.
Well, Adam and I touched on this earlier. I'm in the process of moving my residence. So we are getting rid of a lot of things and we're going to purchase new things and big ticket items. We have some TVs, we have some bedroom sets, exercise equipment, things like that we're selling. And if we use, say, one of the same platform, Venmo, PayPal, whatever it may be, and that goes over $600, how is that going to affect us? Because it's over $600.
Well, how it's going to affect you is first, there's a big distinction. Are you doing it with a profit motive or is it a personal motive? Is it like a hobby? If it's a profit motive, then you have to show it like a business. You have to show it on Schedule C, which is for sole proprietors, or on an appropriate corporate return if it's a corporation, and you deduct expenses against that. And if it's on Schedule C, not only do you pay income tax on your profits, but you also pay the dreaded self-employment tax, which is an additional 15% tax on top of the regular income tax. If you're just getting rid of things that are around the house and you put them on eBay for sale, that's not really considered to be a for-profit activity, and you don't have to pay the self-employment tax. But somehow, some way, you've got to make sure that that number that's reported on the 1099 finds its way to your income tax return. Otherwise, you're going to get a notice.
Gotcha.
Sure, because eventually they're going to match up the receipt from the platform of the 1099 and not find its match in your tax return. And that's going to raise red flags. And that's basically what the person I sent you, Samantha, who's been on our program, the person I sent you is going through that now. But it just seems to me, after reading the article, all this is a bringing up to date of the internet to real life. Because in real life, any profit you make or any windfall you make of 600 or more, you end up with a 1099 for as it stands now. The internet's been semi-exempt from that for a long time, but it's just them bringing the internet online with the brick and mortar. That's how I see it.
Yeah, I agree with that. So it takes a long time for the IRS and for Congress to develop tax law that goes along with what else happens in society. Like right now, they're starting to really crack down on cryptocurrency and
Mhm.
virtual currency. And that's been around now for quite a few years, but it's taken them a long time before they've begun an enforcement program for that.
There's a lot of fear that regulation's going to destroy the cryptocurrency marketplace.
Mm,
I don't think it will, but there's a lot of fear about it because the more regulation you put in, the harder it becomes to manage the product for the blockchain users.
Yes, yeah, it does. And that's been one of the allures of virtual currency is nobody knows my name, nobody knows where I live, you know. But that's going away. A couple of years ago, the IRS won a huge case against Coinbase, where they subpoenaed Coinbase, and Coinbase had to turn over all transactions by U.S. citizens above a certain amount. And
Sure, because people were using it. Unfortunately, some people were using it for nefarious purposes of moving money.
Right.
It became the new shell corporation because it was veiled and hidden at the
Mhm.
same time.
right,
Not just veiled off, but hidden in,
but they're gearing up. They're gearing up for virtual currency. The only problem with the IRS had is they ran into COVID-19, so that program kind of stalled and it's slowed down now. But it'll crank up.
I'm
in
sure
August.
they'll get there. I don't think, as far as I know, the IRS has never met a prophet it didn't like.
Right.
They're not
Right.
going to
It takes
sit back
it takes
too
them a
long.
while to figure it out,
Yep.
though.
Yeah, and they
All right,
will.
so, John, you've seen our show, you know the format. Kim and I have poured through lots of questions we've gotten from our viewers and from
Okay.
other places, and they deal with tax and tax issues, and we're gonna throw those questions out there, and you're the expert, and Kim and I will chime in a little bit with what we know as well, and let's see if we can't educate a whole bunch of people today.
All
How's
right.
that
Sounds
sound?
good. All right.
All right,
All
so
right.
go ahead, Kim.
I'm going to start with the first question. This is from Luis in New Mexico. Am I required to file a tax return even if I only made a small amount of money for the year? It's an excellent question. I know a lot of us have kids at home working part-time jobs. So what's the deal with that?
So the IRS under the 2017 Tax Reform Act came up with something called a standard deduction. I mean, standard deduction's been around for a while, but if you make less than the standard deduction, then you don't have to file a tax return. And for instance, it's $12,200 for a single person. It's $24,500 for a married couple. However, there's also, when you look at Form 1040, there's more than one tax assessed on Form 1040. And another tax that's assessed is the self-employment tax. So let's say you have net profits from your business below $12,000, and let's assume that you have no other income, but you're below $12,000. You still have to file Form 1040. You still have to declare that self-employment income, because if it exceeds $400, you have a self-employment tax to pay. Now you can get out of that probably by having an earned income credit. And if that's the case, then it's to your benefit to file that return, because the earned income credit is a refundable credit. So we call a refundable credit is a credit that if you have more of those credits than you have income taxes assessed, then you get a check for the difference. So if you only had $1,000 in self-employment tax, but $3,000 in earned income credits, or maybe child credits along with that, then you would get a check for the difference. So it's to your benefit in that situation to file a tax return.
Sure, I find a lot of people don't understand how the tax credit system works, which is pretty much all, not 100%, but pretty much all of standard filers have built-in credits that they're working with and or against, depending on their amount of income and where that income comes from. I have done a little work in taxes, and I'm sure you realize that just by my comments on your posts online. And I do understand it, but most filers who make under $30,000 a year, they have enough credits that they're probably going to erase whatever tax burden they may have unless they own a business and are paying that self-employment tax.
Especially if they have children. Or they
Yeah,
have-
especially with the new
Right.
child, well, there's new child tax credits that are even bigger to end child poverty. They're hitting that new act that just passed.
Yep.
But yeah, these tax credits are huge to those that make lower incomes below 40,000, 50,000 a year. The amount of credit being given is much higher than it's been in 50 years.
Yeah, certainly. I think it's what I really like in this new law compared to what was before is that you can set it up so that instead of getting a big refund, you can get a check every month. So if you're getting, I think it's $3,600 per child, you can get that.
300 a month.
Every month you can get a deposit or a check.
This way it helps your budget.
Yeah,
Right.
exactly.
Helps the budget, and that's the way people live. They don't, you don't live your life for a big refund. You know, you get hungry in August and
And you've got 8 months before you
pay
can.
the electric bill. So you can't wait for that tax refund.
And I think that that's a big misconception for people, that they work to get that big refund at the end of the year, not knowing that, hey, if you change your taxes up a little bit, you could be getting that all throughout the year instead. So you're absolutely right on that.
There's a lot of ways for that adjustment. Let me get to question 2, because I think we're going to have a lot of fun on this one. So question 2 comes to us from Brian in Illinois, a familiar territory for you, John.
Yep.
If I haven't filed my taxes for the last 5 years, am I going to jail?
No. And here's the reason why. In general, people that go to jail for tax charges, usually that's an add-on charge. So if somebody committed massive securities fraud or massive bank fraud, and there were income tax issues along with that, they get charged with tax fraud. Most of the time, most of the criminal prosecutions around taxes don't involve fraud as a standalone charge. Okay. Secondly, if you haven't filed taxes in a number of years, you could be charged with willful failure to file an income tax return, which is not as bad as fraud. So willful failure to file is a misdemeanor. Fraud is a felony. And the prison term is much longer, but almost always when somebody doesn't file returns, and what I'd like people to understand about the IRS is if you have tax problems, you've got back debt, the number one priority for the IRS is to get you back into the system. That's number one. You know, I mean, okay, you got all these problems in the past year, but what's important right now is 2021. What are you doing right now? So they want to see you making estimated payments on the current year. They want you to file the current year's return. They'll give you time to file those back returns. But
That's good.
Their immediate goal is, you know, what are you doing for us lately? What are you doing for us right now? They want to get you back into the system. So if somebody doesn't file for 5 years, in that situation, you notify the IRS. You try and find out whether the IRS has taken any collection action against you. You try and find out whether they filed a lien against you. A lot of times people have liens filed against them and they don't know it.
Exactly. And it's easy to look up. You just go to your assessor in your county, wherever you live.
Well, that's where there's public notice, but you can have a lien and the assessor doesn't know it. You have a lien anytime you owe $10,000 or more, the IRS can assess a tax lien. But when people haven't filed back year's returns, if they contact the IRS will give them some time. They will hold off filing a lien most of the time if there isn't one, and then you go for your deal. You know, there's pretty much there's 4 ways out. I can go into that later, but you shouldn't wait. And this is a good year to do it too, because IRS is holding off on enforcement action due to COVID. They know people are in
That
trouble.
won't last very long, I'm sure.
Yes.
Yes. take advantage of that situation. But John, let me ask you, if somebody hasn't filed taxes in 5 years, at what point is the IRS going to assess taxes on them and say, okay, you did file for 2016, so based on the information we have, this is what you owe?
Well, there's something called a substitute for a return. And that's where the IRS really helps you out. They file your tax return for you. And it's, in a lot of cases, it's not a really
The
good.
backhanded help you out.
Yeah, they're really helping you. So they'll file it as a single person with no dependents. And they will take the information they have on file. They will compute a tax. They will assess a tax, penalties, and interest. And so if you're married, you've got children, you've got mortgage interest and all that other stuff, you have to file a tax return, and they will accept the tax return that you filed as a substitute for that substitute for a return. But they, sure, I mean, you could not file a return and never pay tax, but it doesn't work that way.
No, they'll catch up to you eventually.
Yes.
My experience, though, to answer the question that was asked really quick from my experience, and
Right.
you have a lot more experience than I do, so I defer. But if you haven't filed your taxes in a number of years, you're worried about going to jail. Jail is for the people who are defrauding the IRS of millions, not of thousands.
Right.
That's been my experience.
Right.
The Al Capones of the world go to jail for tax evasion.
There's a cost for the
mobsters,
IRS to prosecute.
corporate villains, things like that, where you can't really nail them because there's lots of loopholes for the laws they've broken to make their money. But the one loophole they break when they're doing that they can't get out of is paying the taxes on that money.
Right.
And so that's basically, they don't jail the everyday male, female, the working class citizen. It's rare. It's incredibly rare to go to jail for tax evasion unless you're defrauding them of a substantial amount of money.
And people that do time for taxes, it's tax fraud. It's not for willful failure to file.
Right. A misdemeanor doesn't normally land you in a cell, whereas a felony can for 10 years plus if you're not careful.
Right. So don't lie.
No problem there.
Yeah.
I promise.
Exactly.
Yeah.
Scouts honor.
Yep, you don't lie to the IRS because they
Kim,
will
question
find out.
3.
Yes, question 3 is from Tina in Washington. Is it really possible to get the IRS to accept less than what I owe, as I owe about $22,000 and I cannot possibly afford to pay it?
Okay, so there's, as far as less than you owe, there are 3 programs. There's one is called currently not collectible. Another is called partial payment installment agreement. And the third is an offer and compromise. So currently not collectible is for people who are really poor. So the IRS looks at your average monthly income. They allow you certain expenses against it, like so much for rent, so much for food, clothing, etc. And they subtract all of that and they come down to a figure called monthly disposable income. And for some people, that's 0. For some people, that's a negative number. And if that's the case, then they'll give you currently not collectible status. The other 2, partial payment installment agreements, which is my favorite, that is where you do have some monthly disposable income, but the IRS has only got so many years that they can go after you to collect it. Usually it's 10 years. And let's say they assess these taxes and 3 or 4 of those 10 years go by and you can only afford a couple $100s a month, and the amount of tax that's owed is $100,000, just to make up a number. Well, you're never going to pay that off at $200 a month, but they also know that if that's all you have, then that's all you have. People only make so much money; they only have so much money, so they're willing to work out an agreement where you partially pay your tax debt, and typically in those agreements, they check back with you every 2 years, and you file another financial disclosure statement, and they adjust the numbers. And the the big one that everybody talks about. So you listen to radio and TV and they talk about pennies on the dollar.
Yep.
Oy.
All
Yep.
three of these are like pennies on a dollar, but the one that they refer to most commonly is offer and compromise, which is you sign a contract with the IRS and you settle on an amount owed. And that involves a payment of 20% down of the offer. And if after they accept it, you've got 6 payments where you pay off the remaining 80% of the offer. And if they go along with that offer, then you've got to file your tax returns for the next 5 years, because if you miss a year, then you go back to the front of the line again. They reassess all the taxes
And
Yeah.
penalties.
and penalties. So those are sometimes hard to get, and that's not necessarily the best deal, the offer and compromise. It depends on a lot of factors that would be hard to get into here. But a lot of people would qualify for a partial payment installment agreement if they're really squeezed. And people are going to be squeezed, right? I mean, we've had the one of the worst financial crises in U.S. history. You know, people's stimulus money is running out, and they're still not. They're working at 30% of their income, 40% of their income. They've got this past tax debt. They might be excellent candidates for a partial payment installment agreement. And one of the advantages to the partial payment agreement is you don't have to give them a big payment, a big chunk right up front. You just start up with your monthly payment. So,
Yep, those PPIs, those PPIAs as they're called.
right.
Those PPIAs can keep you out of trouble because you come off of their radar as long as you keep making your payments.
Right.
Yes.
They can't be bothered to, unless somebody defaults, they can't be bothered to be looking at how much longer it goes. The IRS handles an awful lot of different things. I mean, there's about 18 different departments that are at the top, and those spread into hundreds of departments below them. So, they have so much going on that, worrying about someone who's made an agreement and is making the payments is
Right.
not a priority at all.
Right. Yeah. Because at that point, it's just a software issue. It's all
Exactly.
software.
Did they make the payment? Didn't they? And the software just lets them know. It's like the old red light comes on. We didn't get Joe Smith's payment arrangement payment this month, and it initiates a letter. From what I know, because I've worked with a few tax attorneys in my day, is they will usually, and this is how lenient they can be. If you default on one payment of your PPIA, they won't necessarily cancel it instantly. They will give you 30 to 60 days in most cases to catch up and continue it.
Right. And that's the case with most installment agreements. Yeah, they'll give you a chance to catch up.
All right. I'm going to bring it up now because it's my pet project of the year. Coming up in about 5 weeks, and I want to invite you especially to this
Okay.
one. My pet project of the year is fighting for UBI, Universal Basic Income.
Right. Yes.
And you know that. I've mentioned it before.
Andrew Yang. Yeah.
Yep, Andrew Yang. Now it's actually spread a lot wider than Andrew Yang.
Yeah.
They're
right.
actually trying a form of it in 2 California cities at this
Yep.
point in time, Stockton and
This right
Oakland.
here.
We talked about it last week.
Those are partial UBI. They're not real UBI, but at least it gives them a chance to study the effect of giving free money to families that need it. It's being tried in Stockholm now on a massive scale. It's been tried in Sweden. It's been tried in Switzerland. It's been tried in Finland. The results have always pretty much shown the same numbers, and I'm not going to get into all the details, but the numbers are mostly all positive. More than 95% positive things happen when they put this UBI in place. And to me, a universal basic income that meets just the literal standard of living, nothing more. So let's say somewhere between $1,200 and $2,000 a month to every adult citizen of America could be the answer to fix capitalism.
Right.
I know that sounds crazy, but it's true. Because when you relieve the pressure on people to make enough to pay their rent and buy their food, you relieve that pressure and have their phone, because we all revolve around our phone. Literally, everybody revolves around there. So those are your 3 major necessities. You could actually live if you had nothing else but a roof over your head, food, and a way to contact, whoever, wherever, whenever. If you have those three things, you're okay. You will survive. You take away the need to go do work that's way beneath what you want or that is completely the opposite of what you enjoy. And what you end up with is people taking jobs because they want them, not because they need them. And when that happens, you end up with a more productive workforce. You end up with a bigger GDP.
You end up with people getting jobs that, well, some people can't work, which is
Well, that too, that, you still have to have a social safety net below it, but it's a much smaller net with a lot less bureaucracy involved.
Yeah, I've been following UBI with a great deal of interest the last couple of years.
I figured you would have,
And,
just based on conversations we've had before.
The last COVID bill kind of, moves us a couple of steps closer to it with the child credits, right? I mean, so
Right, that's a watered down form of a UBI, definitely.
right. So,
But I truly believe, from my accounting position, I'm not a CPA, but I do have a background in numbers and math, and Kim knows about it. I do this math in my head that just amazes her and my wife all the time. The math adds up. We'd see an increase of somewhere between 8 and 12% to our GDP if all of a sudden all of those people living in tents and little teeny weeny, studio apartments that are no bigger than a closet, all of a sudden had $1,500 a month they could spend. That spending is going to just explode GDP, because you're talking about 20 million people in that group that, barely lives paycheck to paycheck. They're below the paycheck to paycheck standard. These people having money means more spending in the mom and pop shops, the brick and mortar stores.
right.
It leads to a domino effect upward instead of downward.
Right. Yes. Well, that's, I think, the president administration strategy is a bottom-up
moving.
strategy.
Yeah, it's moving that direction, but you have to go in baby steps, or else you upset people because, the specter of socialism looms large.
Well, I think the big issue is the level of automation.
Well, that too, but
Right. Well, I mean, a lot of people are not going to, more and more people are not going to be able to work. I mean, there simply are not going to be.
Oh, there won't be enough jobs for the amount of people eligible. That's
Right.
for sure.
Right. And one software engineer can account for 1,000 people, can knock out 1,000 jobs at once.
One
Yep.
robot packer or picker in a warehouse can substitute for 20 employees,
Right.
and they're faster and more efficient.
Right.
So yeah, we're headed there one way or another. But when people talk about the looming socialism in the background, I try to remind them that the United States has two of the biggest socialist programs in the world. One is our military, and the other is our public school system.
Right.
Both of which are 100% socialist, and both of which work better than any other system in the world. Even though the public school system has its caveats, it's not the greatest, I agree. But for the amount of kids that get educated and the amount that is spent for the teachers that we have, who do it not because they're making any money, because teachers don't get paid nearly enough,
They do not.
but because they actually believe in education and they believe in educating children, it's not a very bad system. We don't give it enough credit. That's just my opinion.
Right. Yeah.
Yep.
Well, I think one of the attractions of UBI is you're just sending somebody money. So there again, it's basically a software thing, right?
Sure.
It's not a labor-intensive social program.
Right. It's not means tested. There's no restrictions. It's just, here's the money.
Right.
And what we found, what has been found in the 18 major tests that have been done in the past 50 years is this does not increase alcohol or tobacco consumption. What it does is it increases the number of people going back to school. It increases the number of people with less health issues. It increases all the positive things, because you're taking a burden off of the people that are trying the hardest.
Certainly. Yeah. I mean, I think there's a lot to be said for it.
Well,
Yeah.
it'll definitely be interesting, and we're looking forward to Adam having his special edition of Cruise It Into.
I'll send you an invite, John. I'd love to have you in that
Sure.
forum.
Okay. Sounds
So
great.
let's get back to our next question. Adam, you want to throw that one out?
Question number 4 comes from Jessica in Vermont. This time of year, nice time of year, spring is springing. I often adjust my dependents so that I hardly ever get a refund or owe any tax. Is this okay?
That's fine. Yes. I mean, if you're disciplined with your money and you end up with, you're able to save money each month instead of having it withheld in taxes, waiting for a big refund. I think that's you're better off doing that. I think you make, investment wise, you make more money. Plus you're more liquid too. And we don't talk enough about liquidity. It's nice to have savings in case there's, the car breaks down.
Right. I mean, remember, most people, per the study this past year during the pandemic, most people cannot afford a $400 surprise expense.
Yes.
Exactly. Life happens.
Yeah. That's what credit cards are for, right?
Yeah,
A lot of people
sure.
think that.
That's how I get all my customers. And there
There
it
it
is.
is. Yep.
Okay.
Life happens. Be prepared.
Yeah.
That
Absolutely.
background I use during my Zoom meetings with potential clients.
Right.
Because they forget that life happens. When I'm talking to a new home buyer, they forget they're not going to have a landlord to call if the hot water stops coming out.
Yep.
Or, if the septic tank backs up, or if they have roaches all over the place, or termites, or it is now their responsibility. And the only thing in their mind is, oh, I just got to pay $1,100 a month for my mortgage and that's it.
Right.
Yep.
No, surprise
Doesn't-
expenses come up almost every month when you own a home.
So one way that the tax withholding works into this issue is that if you have less taxes taken out of your checks every month, instead of working for that big refund, you can start setting aside money for an emergency fund. So you could have a short-term investment that is very, that is very low risk. So in case, you have the car repair, it's always cars that get
Right,
blamed.
something like a simple money market checking that'll get you
Right,
3
right.
to 5%
And you can
interest.
start setting that money aside during the year for, because things happen 12 months of the year. They just
Yep.
don't happen 1 month of the year.
Exactly.
So, that's a good thing. And I've known people, I worked in HR when I was in corporate America. And I know people who adjusted their dependents every quarter, basically, so that they would even out by the end of the year. As long as you're not building up a big debt to the IRS, I don't think they care about it. That's my opinion. They just want to see that at the end of the year, you didn't quote unquote steal 5,000 that they could have had in their coffers until they had to refund it to you.
Yeah. So the IRS doesn't care as long as they get paid.
Yep.
They're fine.
Right. We have one more question, and then we can kind of talk a little bit more before we let everyone go. But this question is going to lead to a discussion that I think we're going to have a lot of fun with, because it deals with a post that I answered on your LinkedIn recently.
Yep.
Okay.
And I think there's a lot of confusion around this. And this is Randy in Mississippi. When I am told that I fall into the 23% tax bracket, does that mean I am paying 23% of everything I earn to the IRS?
No, because there's 6 tax brackets, including one that is 0. So if you look at the taxes, I mean, they take all your income, and from that you either itemize or you have a standard deduction. And once you subtract that, then that comes down to taxable income. So you look at taxable income, and the first $10,000 is 0 income tax, and it keeps going to 15, 20. I mean, 10, 15, 20, and it ends up around 34%. So I think when someone says, am I paying 23%? I think what they're thinking is, am I in the 23% bracket or the bracket closest to 23%? And they're forgetting that you've got all these other lower income brackets that were taxed much more lightly or not at all. And the other thing people forget about is state taxes. And some states are taxed a lot, like New York and California. And there's a focus on that federal tax, and not a focus on the state tax. Illinois is 5%, so Illinois is a flat tax state, but most
Right,
most
they're not always progressive at the state level.
yeah, most of them are progressive, and that's something that's got to be taken into consideration too. So, so no one is taxed on in one bracket. Everybody's got their income broken up into several brackets.
Okay, Kim,
All
you
right.
want to go? Because then I'm going to do a quick little simile lesson on the buckets that are the taxation buckets. It's one of my
No,
favorite subjects.
no other input other than this is very, very confusing, and I can understand why our listener or why Randy thought that. Because when you look at it at face value, that's what you think is happening. So,
Okay, so let's look at it from the standpoint of both sides. I don't want this to be political because taxation is not a political thing. Okay, when you have someone like Sean Hannity come out and say, "What should I just give 50% of everything I earn to the IRS?" That's almost an impossibility. As John was pointing out, the first 10,000 doesn't have any tax applied to it. So, you know, and an inheritance tax is something that people squawk about on these news programs all the time.
mhm.
Well, unless you're inheriting more than a certain amount, and that amount is well over $1 million, you're not taxed on inheritance.
Right, the first
So,
$11.5 million.
yeah, exactly. I knew it was way up there. I didn't remember. the
11.5
number.
million.
But you know, they're worried about this, and it's really not hurting the wealthy very much at all. But when John posted on LinkedIn the other day, he was talking about Biden's aggressive policies, and people forget the way this country's been structured for 100 years. They only go back in their minds 10 to 15 at the most. And my answer that John liked within minutes of my posting it, which I was really impressed with, is people forget that the normal top tax bracket for most of the first 80 years of the 1900s was 70% at its minimum. At its highest, it was 91%. And here's a funny little tidbit. When it was 91%, the 2 years that it was 91% were the 2 biggest years of economic growth the U.S. ever saw.
Yeah.
So, you know, taxation doesn't stop economic growth. It really doesn't. They're totally unrelated overall. But the fact is, we have progressive taxation at the federal level. And that simply means that each time you earn money, it keeps adding up. That first 10,000 basically doesn't get looked at. Once you hit above 12,000 up to, like, what is it, 15, I think is the first bucket. From 12 to 15, it's a very small bucket. You're taxed at you know, what is it, the rate, something like 14% at the low end. I don't remember. John, you would know it better than
It's
me.
15%.
15%.
Right, 10% and 15%.
Right. And then you go to 20,000, then you go to, and
Yeah.
each time you earn more, you're taxed from that point on at the higher number. That's what progressive means. As you earn more, that money, the more, not all of your money, but that money from that point forward is taxed at a higher level. So no, when you're at to answer the question that was asked, when you're told you're at 23%, so you're falling into the 20 to 30% bracket, so to speak.
Right. Yep.
Okay. The money you made up to 10 wasn't taxed. The money you made from 10 to 15 was taxed at 15%. The money you made from 15 to 20 was taxed at whatever that is. And the money after 20, between 20 and 30, that's what's taxed at your percentage that you're being told. And so when we as progressives, I'm a progressive. I'm a progressive independent. I'm not a Democrat, but I'm a progressive independent. And when progressives explain to tax the rich more, we want to just go back to the way it was always before 1980, which is the top tax bracket after $450,000, every dollar was taxed at 70%. Minus deductions. There were still tons of deductions back then. Nobody paid a whole lot of that 70%. So, you know, it's the way we operated for a long time until Ronald Reagan's great experiment of lowering the top bracket to 29, which caused an immediate recession.
Mm-hmm.
And so I want people to understand, you know, that it's not the devil to have higher taxes on the higher end. They get more of the services that they're paying those taxes in for than anybody else does. If it wasn't for the roads and the parking lots built by the cities, their businesses may not be as productive as they are.
Right, right.
So it's just giving back is all it is.
Yeah. Well, I think, anything else you wanted to add to that, John?
Um, one of the good trends in taxation, actually from almost the Carter years on, has been to knock out the poor people. And by that, I mean change the filing requirements so that people who are really poor do not have to file tax returns. One of the things that worked against that, though, is when they tried to increase the refundable credits. In order to get those credits, then these poor people had to go back to filing tax returns. So I don't know if there's a way, to reconcile that, but to avoid having poor people file tax returns when they're not going to end up paying taxes anyways.
Mhm.
So
Right, I mean, it's
if
like all
there
the
was,
programs. It's
right.
like
So
welfare and all that. The means test is what destroys the program.
yeah,
It's
so
meant to keep people who don't need it from getting it, but it has the opposite effect.
so taxes, federal income taxes do have a big job, and that is, for instance, they have to take care of childcare. So there's child credits. There's educational credits. So, how do we finance higher education? Well, we give these people tax credits for higher education. And the more jobs you give the tax code, the more complex it gets. And that in turn necessitates having people at low income levels, forcing them to file tax returns. So if there was a way around that to adjust, like if you want to subsidize housing or something like that, if there was a way around that, having different agencies take over those issues and stripping down the tax system down to what it was created to do, I think it would be a lot easier to cope with.
And the funny part is, and let's just put it to bed right now, that a flat tax is not the answer because it has the opposite effect of what you would think.
That would be impossible. That would be impossible. Flat tax.
Exactly. I mean, that's what everybody, you've heard it a million times, I'm
Yeah.
sure, over your career. But the whole idea of a flat tax would actually hurt the poor and help the rich. And so it just keeps everybody that's poor. They're never going to be able to climb out of the hole that way. I see your point, though. Your point is there should be an easier way for those that are in, not just poor people, let's just say those that live in poverty. Because
Right.
poverty is passed on, it's generational, it continues. Poor could be a state of, I'm poor this week, and next week I get a $10,000 check for some work I did, now I'm not poor. So let's use poverty as the thing. We have tons of communities that we know 80% of the community is receiving some sort of government benefit because they're all in poverty. This happens a lot in states like Kentucky, Mississippi, and I can name 12 if I tried. Where entire communities, entire zip codes are on food stamps, Medicaid, welfare, etc. That's where you need to concentrate the effort to cut back on the amount of paperwork it takes to get the benefit to these people. You want them to get off the benefit, give them a way off. Stop means testing them so that the minute they earn $1 somewhere, they're off the program, but $1 doesn't substitute the program. It's insane. You need a transition. You need to create a transition from program to work or to some other, business to whatever's going to replace the program. Without a transition, you're throwing people to the wolves the minute they try to get off of these government programs.
Yeah, right. The other problem with qualifying for a program and means testing is that it creates a political, an interest group that's interested in receiving benefits and an interest group that is against it who are not receiving the benefits. I mean, if everybody got the benefits, then everyone would be behind it. I think that's one of the great things about Social Security is you can be rich and get Social Security. But if you think about it, that builds political support for Social Security.
Sure, because everyone's in it
Everybody
together.
gets it.
Right.
Everybody gets it. So.
And that's why I fight so hard for UBI, because it's something they're like, you're going to give Jeff Bezos $2,000 a month? Yeah, and you know what? It's not going to matter at all to him.
Yeah, right.
To him, that's nothing. That he makes more than that in a half hour right now, based on his income level.
Yeah.
So it's not going to matter to him that he gets $2,000 a month, but it will matter to all the rest of the people.
Mhm.
And that's the important part. So what? So the rich will hoard their $2,000 checks. Whoop-de-doo. We have what? 1 million of people in that, out of 340 some odd million people in America, 1 million are in that class. 293 million are in the class that desperately need that 2,000 a month. I think the needs of the many outweigh the needs of the few or the one, to quote Star Trek.
Right. Yeah, I agree.
Well, I think overall, there's so many different aspects of taxes, and people don't want to think about it. They're confused. They don't know about it. You have given us so much information and a wealth of knowledge that people don't know. And I I think, John, you and I may have had this conversation. It seems like the IRS is very, very aggressive in going after what is owed, but once the person acknowledges it, they're willing to work with you. Because like you said, they just want you back in the system.
Right. They want you back into their system. That's a victory for them. That's what they're looking for. And I think that there is almost a solution for just about every problem. As long as you're willing, to work for it. One of the problems I have with clients, and one of the big problems with taxes, is the amount of work that you have to do. It's not just money; it's work. How much work do you have to do? And some people resent doing any type of work or effort. But if you can get past that, then you can work something out. There's a solution out there. I mean, if they're willing to settle for currently not collectible, I mean, what else do you want? It's already zero.
Yeah, exactly. I mean, it doesn't get much better. You're not gonna, most people do not win their cases against the IRS. And I'm just gonna let everybody know, you'll go to YouTube after this and you'll type in "Are taxes legal?" and you'll get these videos from these crackpots who go and quote things from the Constitution. The Supreme Court has ruled on 3 separate occasions that
Yeah.
income tax is legal. There is no doubt about this, and you are not gonna win that argument. So
If
please
you ever
don't
want
get
the
fooled
IRS
by
to
these
come
things.
down on you as hard as they possibly can, be a tax protester. That's a class of taxpayer that they really are absolutely vicious with, and the courts
Excellent
the
advice.
same way. They don't waste any time at all. And
That, or if you're a sovereign citizen.
sovereign citizen, yeah.
Yep, they come after you pretty hard then too.
Yes, they will. You're a target for them. You're a bullseye.
Yep, I can see that. John, it's been amazing having you this week. I'm so glad you were able to clear an hour to be with us.
Sure,
Yep.
sure, it's
For
fun.
all of our audience.
I always like talking about taxes.
We always love learning things. So
Yep.
that's why we
I
have
learned
guests
quite a
like
bit.
you and all the people. In fact, we have another guest coming up this week who has a book all about her divorce with corporate America. Katrina Roddy is coming up later this week. And she's like, steal your success from corporate America. Take what you learn there, go there for a couple of years out of school, learn what not to do, and then start a business.
Right. You'll learn what not to do. Sure.
Exactly. Well, I love using that line because I spent 15 years and Kim spent 30 years in corporate America. And the fact that she's still alive to talk about it amazes me. 15 years was all I could stomach. And I learned a lot about what not to do and how not to treat customers and how not to fail from being in corporate America. Because corporate America, behind the curtain that people don't see, they fail a lot. When you work in corporate offices, you hear about the failures on a daily basis. The public never hears about them, but those who work there hear about them constantly.
Yep.
And the adjustments on your desk every morning coming into a notice. As of today, this is our new policy. The next day, yesterday's policy doesn't exist. Here's the new policy, because they realized how big a failure their policy was.
Right.
So,
right.
you can learn a lot from corporate America about how not to treat people. Or if you're the, top level people, you're the high executives, you can learn about the structure of what you want to do to be successful later. So you can learn both things from corporate America. So it really does pay to spend a little time there, but don't try to hang your hat on being there your whole life. It's not easy.
Take that info and run with it. Yep.
That's right.
But for any of our audience that has questions about tax issues, John, can we put your contact information at the end of our episode here?
Sure, and I have an ebook about how you can settle your tax debts with the IRS that I updated for COVID-19.
Awesome.
Excellent.
If somebody wanted that,
Can you do me a favor and reply to the email we sent you with a link to where they can get that ebook? And I'll make sure it's in our description box, which is right down there under this
Okay.
video.
all right.
And so they can find your ebook, and I'll put your
Absolutely.
email and contact info for them to find you. And Kim and I, of course, our contact info is at the bottom of every video we do.
Right.
And
Okay, sure.
if they have questions for us, Kim, what do they do?
They can send us an email at questions@cruising into a better financial future. That's cruising, CRUZIN, into a better financial future. And we will address your questions on another episode.
Yep, when your question fits somebody that's on as our guest, we're going to get that question in here, or at least one similar enough that your answer will be given.
Yep.
So with that being said, again, John, it was a pleasure having you. I hope you had a good time. We're going to sign off until our next episode, which will be with Katrina Roddy. And until then, I hope everybody keeps cruising into a better financial future.
Thanks. Take care.
Thank you for being a part of Cruising into a Better Financial Future. Don't forget to hit subscribe so you don't miss a future episode. We'll see you next time. Bye.